My hero is Jim Rickards. I think he's calling for $35,000 gold.
Yeah.
And then I think $200 silver is easy. And again, it's just because we can't stop printing. Another book is The Big Print by Larry Lepard. Everybody should read the book because they can't stop printing. That's the issue. It's not gold or silver. Is that we have the most incompetent political leaders possible called the Federal Reserve Bank, and they're printing and printing and printing.
So you have all these things going on, and again, a tremendous amount of hoarding going on, which is relevant for commodity people that are trading commodities. Because the gold, you want to know about the gold market? Well, the gold market, the secular bull is still in place. It will peak out at $6,000 to $7,000 an ounce, and the reason why people are worried about the United States.
After a decade of relatively modest appreciation, the precious metal has entered what many analysts are describing as a generational bull run, one fueled by a perfect storm of geopolitical friction, dollar weakness, central bank ambition, and retail investor enthusiasm. Meanwhile, central banks globally ramped up their gold purchases at a pace not seen in decades, with holdings now accounting for nearly 20% of official reserves worldwide, up from around 15% at the end of 2023. Robert Kiyosaki and Steve Hanke are two prominent voices in finance and economics, known for their critical views on the global monetary system. In this video, Robert Kiyosaki expresses deep concern about the direction of the global financial system, arguing that precious metals prices are often influenced by large financial institutions that manage liquidity and market sentiment. He suggests that while the US dollar remains relatively strong, it can temporarily suppress gold and silver prices. He further explains that a major structural shift is underway, with increasing numbers of investors and central players moving capital into gold. Regarding price outlook, he indicates that gold could surge to extremely high levels over time, with long-term projections reaching as high as $35,000 per ounce in a major monetary reset scenario. At the same time, he predicts silver could climb toward $200 per ounce, driven by inflation, industrial demand, and structural weaknesses in the financial system. Based on his observation, Kiyosaki strongly advocates holding physical assets such as gold and silver rather than relying solely on paper-based financial systems. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from Robert Kiyosaki and Steve Hanke's recent interview.
Why is silver so low? Well, was it Goldman Sachs, one of those guys? Not Macy's or
Yes.
Neiman Marcus and Goldman Sachs, any of those guys. They play games with the price of silver and gold. They keep it suppressed. And one of the biggest secrets that people do know, I'm a gold guy. I own gold mines. I also have lots of gold. The biggest secret of all is how many banks are dumping treasuries to buy gold. So the shift is on right now. And by having the dollar remain strong, the price of gold remains weaker, same as silver. So they're just playing games with money again. And the average American is like, oh, they watch CNBS, as they call it, and they don't get the facts. So I'm very concerned because my generation is going to be the first generation that mass homelessness because of 401k is going to be toasted. I am a big fat furry bear pessimist. I love green boxes of silver. And people say, why do you like silver? They talk about solar panels and all this. Is that because I was in Vietnam, I know what money is. And I take the silver eagle and I can spend it. So I have lots of silver eagles hidden in a vault someplace in Zurich that if I have to go and spend it, I'll just go and spend that. I don't trust the dollar. If you read Rich Dad, Poor Dad, I said savers are losers because you're saving the dollar, which they're printing like crazy. So there's another book I recommend out. It's called When Money Destroys Nations by Philip Haslam, Haslam. And we were talking before we went on the air. I was in Zimbabwe when the Zimbabwe dollar collapsed. And boy, you haven't lived until you see what happens when the money collapses. The Zim dollar collapsed, and there I was like this. I had these black soldiers with AK-47s They're guns in my face, stealing everything. I mean, took my watches, took everything with me. And I said, I'm back in Vietnam again. I'm back in Vietnam again. And that's what happens when money collapses. My hero is Jim Rickards. I think he's calling for $35,000 gold.
Yeah.
And then I think $200 silver is easy. And again, it's just because we can't stop printing. Another book is The Big Print by Larry Lepard. Everybody should read the book because they can't stop printing. That's the issue. It's not gold or silver. Is that we have the most incompetent political leaders possible called the Federal Reserve Bank, and they're printing and printing and printing. And what most people don't see, because I own gold mines, I own a gold mine in Utah now, or Cisco mine, and the number of people that are buying gold, they're not saying anything, and just stashing it overseas. Like, outside of Zurich, lots of people are storing gold out there and in Singapore. But the average American doesn't see it because they're not aware. So that's why I said to you, I asked for your permission today, can I be as pessimistic as possible? Because the average person goes, oh, no, tomorrow will be like today. And I said, no, I've seen
That's true.
I've seen it differently. Well, the biggest thing is that, I wrote this other book here called Who Stole My Pension? And that's going to be the next biggest thing. Because in 74 was ERISA, 1974, Employee Retirement Security Act. Today it's called a 401k. And my prediction is this is as dire and as pessimistic as I can get. And by the way, sports fans, I did ask Danielle if I could get as negative as possible, because I want to scare the heck out of you right now. Is that this ERISA was set up to steal our wealth. It's called Employee Retirement Income Security Act of 401k. The S&P 500 of the stock market is the highest it's ever been in history. We've blown it into a bubble. And what I predict is going to happen is in my generation, I'm a boom.
Yeah.
Trump and I are the same age. We wrote two books together. This one here is Trump and myself. And we're very concerned about what's going to happen. It's like, the cartoon Peanuts with Charlie Brown and Lucy, where Lucy holds the football and she says, come on, Charlie Brown, come on, kick the ball. And Charlie Brown says, no, you're going to pull it away from me. She says, no, I won't. So Charlie Brown winds up and Lucy convinces him that she won't pull the football away. And Charlie Brown goes charging ahead, kicks, she pulls the football away and he falls on his butt. That's what they're going to do to the boomers, because in 1974 was the petrodollar, when we guaranteed Saudi Arabia we'd protect them, and also ERISA, 1974. So I look at this from the most pessimistic point of view possible. My generation, boomer generation, is being set up because when this S&P 500 blows and crashes, then we're going to be more homeless people than ever before, and there'll be boomers who one time had jobs and had money, and they're going to steal their wealth via the pension. That's my pessimistic point of view, which is why Daniela and I are such close friends, because I prefer real money, gold and silver, And I am for real. I've taken companies public on the New York Stock Exchange, my gold mines and my silver mines. And I'm very much a hard money advocate, not this fake money, print money stuff. So that's why I love what you do, Daniela, because we've got to wake people up. They're stealing our wealth via printing fake money.
During the interview, Steve Hanke explained that the ongoing geopolitical disruptions are unlikely to persist for long, as the economic damage they are causing globally is simply too severe. He further notes that even if tensions ease immediately, the damage to infrastructure could take years to fully repair. As a result, he predicts that energy markets will remain tight, with another spike in oil prices likely in the near term due to supply gaps created by disrupted shipments. He highlights a growing disconnect between physical oil prices and futures markets, suggesting that paper markets will eventually adjust upward to reflect real-world shortages. Looking at precious metals, Hanke states that gold remains in a strong long-term uptrend, supported by declining confidence in the global monetary system. He predicts that gold could climb higher during this cycle, driven by investors seeking protection from currency risk and geopolitical instability. He also points out that countries like China are increasing their gold purchases as part of a broader move away from reliance on the US dollar. More broadly, Steve Hanke emphasizes that the world is entering a powerful commodity supercycle, where not just gold and silver, but a wide range of raw materials are rising significantly. Let's jump into the interview.
I think the blockade is not going to last till the end of July. So, in short, the blockade is a farce. It will fail, and it'll fail. One reason it will fail is simply the reason that I gave you. Now, it'll fail also because it's causing tremendous interruptions and damage to the global economy, including the United States, because we have fertilizer not coming out. We got a third of the world's fertilizer isn't coming out of the strait.
Right.
Helium, aluminum. So all of the Gulf countries are being disrupted by this too. So it's not only the global, but at the micro level, the members of the Gulf Cooperation Council, which I know very well because for 6 years I served on the financial advisory committee of the United Arab Emirates, and I served for a number of years on the international board of the National Bank of Kuwait. So both those countries are in the Gulf Cooperation Council, and both are being damaged. So in a nutshell, we have, particularly for your listeners, commodity prices going up. We haven't seen the end of this. It's going to last a long time because, for example, in the Gulf, you've had 80 refining facilities and pipelines and so forth damaged. A third of them have been damaged very severely, and it's going to take up to 2 years. If everything stopped today, Ivan, it would take up to 2 years to get those repairs done. And re-drilling of the oil fields in Iran and all of these things. So this is an immediate thing with the markets. And I think, by the way, by the end of this month, we'll see another oil spike going up. And the reason for that is simply the fact that it takes 4 to 6 weeks for oil in transit to go from the Gulf to its final destination on average. And by the end of April, everything that had gone out of the Gulf before the war will have been delivered. So that'll be the end of that. And so there'll be a gap where nothing is being delivered.
Right.
And that will spike the oil again. Plus the fact the market behavior, already you're seeing big physical shortages sprinkled around the place. And Brent is trading more or less, let's say roughly at 125 a barrel, but the futures, the paper market's only around 100.
Right.
So there's the biggest gap between physical and futures that's ever existed, and the paper market will ultimately, by the end of this month, be mugged by the physical market, and the price in the paper market will go up and start converging towards the physical price, so that gap will be closed down and become, shall we say, more normal again. So you have all these things going on, and again, a tremendous amount of hoarding going on, which is relevant for commodity people that are trading commodities, because the gold. You want to know about the gold market? Well, the gold market, the secular bull is still in place. It will peak out at $6,000 to $7,000 an ounce, and the reason why. People are worried about the United States. They don't want to get trapped in the dollar system. And so they do what? They find substitutes like gold. And by the way, the Chinese are buying again. The commodity thing in general, by the way, just to get on this, in general, getting gold, silver, of course, is going up. The whole thing is we're entering another super cycle in commodities. Everything is going up. And will go up and go up and be aggravated because of this war, by the way. That's kind of set that was a time bomb that went off. So if you look at things, for example, the things that I look at that are a little out in the weeds, but I pay a lot of attention to them in critical materials. Ferrovanadium, the last year, it's up 90%. Molybdenum, up 23%. Lithium carbonate, 34% up. Lithium hydroxide, up 44%. Spodumene, lithium spodumene, up 49%. Here's the big one, tantalum, up 173%.
Wow.
and on and on and on. Niobium up 29%, aluminum up 20%, tin up 13%, steel up 16%, crude oil, of course, we've already talked about that, up 91%. So you want to be pivoting away from your portfolio, away from the tech, the high tech stuff, into hardcore commodities again.
Major financial institutions and analysts maintain a strongly bullish outlook for gold and silver through the remainder of 2026, driven by geopolitical instability, central bank demand, and industrial shortages. Gold remains exposed below significant resistance, and silver remains in a more positive long-term pattern. The second significant action in both markets will be based on the development of the US-Iran situation toward a permanent peace agreement or further deterioration. As global risks continue to build and confidence in fiat systems faces increasing pressure, will investors proactively shift toward hard assets like gold and silver, or wait until the next major financial shock forces that transition? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.